Very good morning. You're watching India Market Open, and we are looking at the big cabinet decisions last evening. Maybe some impact on the markets, definitely a positive. You know, Niraj, this came last evening, late last evening, and we were having a conversation, of course, within the editorial team as well, because the markets are waiting to see what the Modi 3.0 plan looks like. And it's on cue, right? Focus on renewables. Focus on huge infrastructural projects.
Yeah. And interesting that the first of the things have kicked off. We are anyways in the season, Tamanna, wherein pre-budget kite flying will happen. Some hypotheses will be laid out. Some decisions will be known and spoken about, sourced, so on and so forth. So good to have official actions being analyzed as well, which is what we'll try and do today.
Yeah, we'll get into the detail of what those announcements are and what they mean in terms of stock impact. Suffice to say, all of this is with a timeline till 2029. So this is clearly, the third term plan, or at least the first glimpses of it. Of course, much more to come. You might not see an immediate stock impact today, but interesting to know that what are the kind of opportunities and what's the policy direction we're seeing. Meanwhile, as far as our markets are concerned, look at the closing yesterday, and that was really an astonishing one. At the end of the day, it was the Bank Nifty holding up the market, so to speak, while really most gains were given up as we came into closing. It was all about the Bank Nifty. Even the Bank Nifty off its highest point of the day, I think 500 odd points off the highest point of the day by the time we closed off. But as far as the Nifty and the Sensex is concerned, really gave up all of its gains and closed mildly in the negative territory. So quite a bit of pressure, selling pressure coming in there towards the end. And the global cues that are setting up are also not giving any clear direction today. US markets were, of course, shut because of Juneteenth. So no action there. Dow futures mildly in the red. The bond yields have stayed at the same levels, about 4.2% for the 10-year. Crude prices have not really moved much, and Asia is weak today. Asia is opened up weak today. In fact, if I look at the implied open for Indian markets, you're seeing a mild positive trend, just about 20 points up, and that might really evaporate by the time we come to opening. Just one more important perspective to look at from yesterday. Remember, yesterday was all about the block deals, and that really showed in your fund flows. And I'd like to pull that up. So while that 7,000 odd crore figures for FIIs buying and for DIIs, in fact, nearly 7,900 crores for FIIs, looks impressive on the face of it. Remember, there were large block deals, bulk trades taking place yesterday. Vodafone, one of them, and several others, in fact, which have impacted those figures as well. So now once all of that action is out of the way, one reckons, Niraj, that it comes down to the bread and butter and, stock-specific action.
Yeah, and but also, Tamanna, just, it's again, you can say that it's a bit of a hypothesis, but just the way that the two coincidences, or not coincidences, but the two way it's framing up, that Bank Nifty, despite what it did, the Nifty ending flat, two ways to look at it. One, that FI flows inwards are now shoring up the Bank Nifty because you expect them to come into banks because banks are cheap and that's the highest weightage. But two, on any given day, 5 years ago or 7 years ago, if somebody would have told you that there is a secondary market mop-up of over 22,000 crores, you would believe the markets would fall a couple of percentage points, 1% or 2%, what have you, whatever the number may be debatable, but it will fall. But the fact that there is some serious domestic flow coming into mutual funds is leading to the markets ending flat. So I think the secondary markets were bereft of too much of institutional activity because a lot of got consumed in blocks in trade yesterday, the QIP plus the block participation. I mean, just look at the block trades and you will see, for example, SBI Mutual Fund participating in Indus Tower, participating in Sansera. They participated in one more as well. And a clutch of other institutional investors did that. So the large mop-up of these secondary market sales that are happening, block trades, QIPs, and that is getting mopped up easily because of retail flows coming in, and that is helping the markets. So the Nifty may have ended flat yesterday, but I think that's deceptive. We are, of course, at a level from where things start to look extremely expensive on a valuation front. But I do think that had it not been for such large block trades, we might have had a good day on the Nifty as well yesterday, shored up by the Bank Nifty, no doubt. And if the FI flows continue, there's no saying why the Bank Nifty cannot do more. So that's the other thing to keep an eye out for. And then the couple of pockets, really, that you keep an eye out for. One, autos may have ended a bit soft yesterday, but it's now been 8 consecutive months of autos having a good move. This is the best performance that the Nifty autos put up since November 2014. And that tells you a story of the kind of uptick and the kind of momentum that autos have had. We were talking about auto ancillaries and autos yesterday. People believe there is still some steam left in this pocket. And last but not the least, I thought chemicals, and we'll talk about the Nuvama note a bit later on, but specialty chemicals is now starting to see multiple brokerage notes citing value in that pocket. Now, we saw Daulat Capital, we saw ICICI Securities, we've seen Nuvama, we've seen a couple of global brokerages. It certainly becomes a pocket that people are now starting to fish in actively. 6 months ago, people were talking about it, that at some point of time, the tide will turn. Maybe buying is 6 months out. Now, people are going out and actively buying into these stocks. So, certainly remains a pocket to watch out for.
Yeah. Just on autos as well, I think more of that policy play, and you talked about kite flying, but having said that, FAME 3 is bound to come. Whether it comes in this budget, a little before, a little after, FAME 3 is on the anvil. And a newspaper report this morning, which I found interesting, Niraj, that this time is going to come with stringent penalties if the companies that get allocations under it's basically an electric vehicle subsidy scheme, if they don't actually adhere to the localization norms, they will be penalized with all of the subsidy they've been given, plus 3% above MCLR. So penalties plus interest. So that's going to be interesting to watch, that who actually goes in for these electrification norms, because definitely that's one big play. The other thing is, I'm keen to know if before the budget, there's a lot of kites flying on the GST meeting on Saturday. So I'm keen to know if that really pans out today, because look at what's been happening yesterday. And I'll just pull up some of those fertilizer names, which were completely going through the roof. Yesterday, RCF, fact over there, but RCF, Chambal, Deepak, all of them doing very, very well yesterday on a report, on a set of news reports, that there will be some rationalization on GST for fertilizers used for food products or for certain segments of crops. We'll have to wait and see if that happens, because by evening there was a report saying it's unlikely to happen. I too believe that you're not going to see too much moving in the first GST Council meet. They're just going to settle in with this GST Council meet. And remember, this has a heavy presence of opposition finance ministers as well. So it's not that you come in and say, I want to do this, I want to do that. It's going to be a little more trickier than that. Even sugar stocks, the sugar stock run-up also, not really making sense beyond a point. Yesterday, you had EID Parry. We'll pull up EID Parry where it closed. Sri Renuka Sugar, EID Parry 11% up. Sri Renuka Sugar also massively running up. And are all these going to sustain is something that I would be keen to see. But if I were to talk about stocks today, and a few of them, not too many, one, I should start with Som Distilleries. I mean, that story just keeps getting worse and worse. Now, the Madhya Pradesh government has cancelled the license for the actual, distillery. Som Distilleries comes and says it's nothing to do with a listed company. It's a subsidiary. It's an associate company. But the fact is that the Som Distilleries website headquarters is the same as this factory in Raisen. They're very much one and the same company, and the allegations of child labor, I mean, children coming and making liquor and their hands getting burnt is just a lot. So, expect some action over there. Sun Pharma also negative today. They've received warning letters from the US FDA for their Dadra facility, and it summarizes current good manufacturing practice regulations. You might see some impact on Sun Pharma. And just Avenue Supermart I wanted to put on the radar. Nothing major in terms of an announcement. They've just opened a new store in Tamil Nadu, so their total is at 369. But I think Avenue Supermart, I don't know how you think about this, Niraj, is one of those sort of sleeping stories which could wake up at some point as it's a well-run business, has not been doing much. but would be an interesting one to watch out for.
No, but so in fact, after 2 years of hibernation,
hibernation is the right term.
But no, in the last 3 to 6 months, it has revved up a little bit. So in some sense, people have seen some value there. But yeah, the question remains, I mean, it's an expensive stock, not there in the derivative side, so hedging out there is difficult. But as you can see, after 2 years of hibernation, it has revved up a little bit. Let's see. It's not a trend. That's the only thing. But, well, be that as it may. By the way, just on Sun Pharma, some details there, because the Dadra plant was inspected back in December, and there were 6 observations issued for Sun Pharma then on the Dadra plant. Then, in April, the plant was classified as official action initiated, and now they have received a warning letter. So, I would be really surprised if Sun doesn't see a reaction today, negative, part one. Remember, the estimates, various estimates range between $225 to $250 million of revenue that has happened from this plant in terms of sales to the US. So, in some sense, this is an important one, and certainly one that you want to keep a keen eye out for. So, Tamanna is right, Sun Pharma right up there in terms of stocks to watch in the session today. A block deal and a QIP might also be interesting today because both of those are happening at a stiff discount. So block deal on PNB Housing, Asia Opportunities Fund and General Atlantic will sell about 4.2% stake in the company. The holders are offering about 1.8 crore shares, which is this 4.2% stake, at a floor price of 773 rupees a piece, which is about a 7 to 8% discount to the current market price. So maybe PNB Housing sees a bit of a pullback. Remember, and a lot of people will equate what is happening to block deals as well as QIPs to Sansera yesterday. Need not necessarily be the case, simply because clean out trade in a Sansera was awaited for long, and now that it was out of the way and well absorbed at a very low discount, the stock ran up in trade. Need not happen with all the other stocks. Remember, Indus Tower did not quite see that. So that's PNB Housing one for you. The second one is a QIP on Mass Financials. It's a 400 crore QIP. 400 to 500 crore QIP. They have the option of upsizing it. The indicative offer price is at 286, which is about an 8% discount. Remember, it's about 8.5 to 10.5% of the current equity base that they are coming out of QIP with. But the only thing is, in case of financials, a fundraise typically aids the price to book multiples, and therefore it gets construed positively. So in that sense, post the discount, Mass Financials might be an interesting one to monitor in the session today or over the course of the next few days. The last 1 month has seen about a 7% uptake, so watch out for Mass Financials as well in the session today. So those are the first 3 on my list. We'll talk about some others, including the Nuvama note and including sugar as well. But Tamanna, what else are you spotting?
So before I get into the detail of all of those cabinet decisions and what those could do, just KEI Industries I wanted to highlight. KEI, remember, had a tough day yesterday as well. They basically have a strike going on 2 of their factories. So this is impacting their cables and wires business. The stock was about 5.5% down. The company, in an exchange filing, has said that all of their products in these 2 places are insured, and the demand from the workers is for higher wages, which is unwarranted. So you might see a bit of pressure sustaining there in KEI. The other one I wanted to look at was Delta Corp. Now, this run-up is actually inexplicable to my mind. 11.5% up yesterday. Again, one of those reports or maybe expectations that the GST Council will take up the online gaming issue. My only question to that is that it is perhaps one of the most contentious issues of all. So maybe not the most likely candidate to take up right in the first meeting. So Delta Corp might see more wind in its sails if there is a belief on the street that some of its pain points will be addressed. So that's one I'd watch out for today.
Okay, and certainly something that had a bit of a revving up in the session yesterday for sure. PNC Infratech is the other one. Company's MD and director has appeared before the CBI. We do not know the nature of the allegation or the investigation at all. And they've said that they are aiding the authorities, as obviously would, but PNC Infratech could be in focus today. So that's one to watch out for. We are talking about specialty chemicals. I want to bring out the Nuvama note on specialty chemicals at the conference. So they had an agrochem and spec chem conference, and Nuvama in that note has said that some of the stocks which, if you can get those lines, some of those stocks which benefit from FMCG could be interesting. So they say that the overall demand outlook for specialty chemicals has improved. And they go on to say that the end user players like FMCG and autos are witnessing one, demand recovery, and two, falling channel inventory. Remember, inventory getting cleaned means that new sales can happen. I think inventory was very high for the last 12 to 18 months. That getting cleared is actually a very good sign. So watch out for that. And therefore, they say that companies catering to the FMCG space and rural demand will benefit quite disproportionately. So in their list, the name of stocks that they have are Galaxy Surfactants, Fine Organics, Rosari Biotech, and Yasho Industries. They say they are the likely beneficiaries of improvement in rural demand. And they also go to say that players like GFL are witnessing sequential recovery in demand and therefore remains a stock to watch out for. So watch out for these names from the Nuvama note for sure. And we'll try and get some details on some of these brokerage notes, but here's a few that you may want to watch out for in the session today. So MapMy India is interesting. Goldman has initiated a buy with a target price of 2,800 on MapMy India. So that is something you got to watch out for. Muthoot Micro, Investec has initiated a buy with a target price of 350. And DCB has seen a Motilal Oswal upgrade. The target has been raised to 175 from 155. So these are 2 or 3 brokerage names that you got to watch out for in the session today.
All right. So those are some of the brokerage names, but I think one big bucket of stocks to watch out for, and maybe not from a today, here and now perspective or an immediate perspective, but definitely from the point of view of what the policy direction is going to be over the next 5 years. We get a glimpse of that from the cabinet meeting yesterday and some of the announcements made. So there were 5 major announcements. I've picked the top 3 or 4 and the impact that it could have on possible sectors and stocks. The first one, I think, is the deep weather port, which has been announced. This is the Vadhvan port, which will come up near Dahanu in Maharashtra. This is in the Palghar district. This has been approved at a project cost of 76,200 crore rupees. It will be among the top 10 ports in the world once completed. Now, the point is that what could this impact? You could see a possible stock impact on companies like Dredging Corporation of India, because you actually have to go out and build this facility. Adani Ports, Gujarat, Pipavav Port, JSW Infrastructure could be some of the plays over here. Obviously, this is a process which will begin now. Then you will have bids. Essentially, it is JNPA, the Jawaharlal Nehru Port Authority, along with the Maharashtra Maritime Board, which is building this out. So some parts of this huge mega project will then be bid out to private players. So that needs to be kept in mind. But one more point about the Vadhvan port, and I found this interesting, Niraj, is that this project has come up in the past as a proposal. It has been opposed vehemently in Maharashtra by Uddhav Thackeray and his party. Now, going into the assembly elections at the end of the year, this could be a sticking point, because local fishermen are against this project. It would eventually go through because it's a central government project.
Yeah.
But, that's one sort of headwind which also needs to be kept in mind. That's as far as the port is concerned. Next is the MSP, which has been announced. Expected lines. So 14 crops have seen MSP. The Kharif crops have seen MSPs announced. This is standard, but it will result in about 2 lakh crore rupees going to farmers. Remember, we are already talking about the impact of a rural push. We saw it in sugar stocks. We saw it in fertilizer stocks. And you might see more of an agri play there. Some of the possible stock impact which you could see is a KRBL and LT Foods. Remember, for those who are exporting food products, their input costs go up. So that would not necessarily be a positive. It will actually be a negative. Adani, Wilmar, Britannia, Nestle, Marico, Patanjali Food, Tata Consumer, all in that category. On the positive side, apart from fertilizer stocks, maybe Kaveri Seeds, Mangalam Seeds, because you would see demand increasing for these products. So that's as far as the MSP bit is concerned. And let me come to the other big one, which is the offshore project. And we'll get my colleague Vikas in a bit to give more details about that. But that's a 7,453 crore approval for offshore wind energy projects off the coast of two states as Gujarat and Tamil Nadu. The idea is to produce 3.72 billion units of renewable energy, and it's a 1 gigawatt project. Ultimately also helps your state electricity boards, and at the end of the day, that's the big plan, isn't it, to increase the proportion of renewable energy. So that's one to watch. Power Grid clearly has a play here. So as a specific stock, I would watch out for Power Grid because they are going to be managing the construction for the undersea cables, the substations, etc. And that was announced in the cabinet meet yesterday by the minister. You can also see Adani Green, Inox Wind, Suzlon Energy. These are some of the players in the space. Siemens, Ports, Adani Ports, Larsen and Toubro. These could be some of the key infra players who could benefit. And the fourth one that I picked, though no clear, I would say, company impact, but interesting to mention, is 2,869 crore rupees to be infused for a new terminal building at the Varanasi airport. Basically, it's an upgradation of the Lal Bahadur Shastri airport there and will be turned into a green airport. It's run right now by the airport authorities of India. So these were some of the key ones that I thought were interesting. But Vikas also with us now here in the studios. Hi, Vikas.
Yeah,
Great to have you on. Good morning. Let's talk about the wind energy projects because that's something that you track very, very closely. Right. And clearly, give us some context first. This is clearly not the first time that we are trying to build these offshore projects. And what the cabinet has approved is viability gap funding.
Right.
So from the approval to completion, how big is that distance?
See, this viability gap funding is for the first time what the cabinet has approved. This policy came up in 2015. From that time, there was not much headway as far as these projects were concerned offshore, because the cost of power in the offshore is comparatively much higher. So because of this viability gap funding, what will happen is that there will be optimization of the cost as well as the tariff also, which now the discoms will find it much more viable to buy such kind of power, because especially if we look at, there is another tender which happened in February. So in that tender, what had happened was that this was on open access basis. So that bid is going to close in July 10th, on July 10th, but that basically there was no viability gap funding. That was between a bilateral agreement that the developer as well as the customers will have between themselves. So there, whatever is the power cost, that will directly be passed on to the customers. But in viability gap funding, what will happen is that the project cost, because say if the two power projects of 1000 megawatt will cost 7,400 crore rupees. So that means 7.4 crore is the cost of per megawatt, which compared to an onshore project is almost 2 crore more.
Right, exactly.
So that's going to make the tariff much higher. So what the VGF will do is to bring down that cost and optimize that cost and also the tariffs.
By how much does it come down by?
It will come down, what the minister yesterday was saying was that the tariff will come down to 5 rupees.
So they bring it down almost to the level at which the onshore project.
Yeah, so they are saying it, but how much viable that projection is, I am not sure.
Okay.
Because the cost is almost, the tariff is coming at 9 to 10 rupees or 8 to 9 rupees. To bring it down to 5 rupees, I think it's still, something that we need to see and watch out.
Got it. Because just one quick, so you said that some of these are unviable, but now with VGF, it could become viable. Is this the first of many that could be anticipated? What are conversations with players suggesting?
Yeah, so that is what is expected. I mean, the VGF might give some benefits, but how much that we need to see, because these two projects will come up over a period of time. It will take some time.
Of course, yeah.
So maybe that viability is something that we need to check over a period of time.
Just trying to understand in terms of process, what is the scope for private players? We're trying to understand listed company impact also this morning. So we know Power Grid is going to build some of the key infrastructure around.
Right.
Since this is going to be part of the huger Gati Shakti plan, which is your, connecting your logistics, you're going to have some road and railway participation as well. So what is the larger infra play here and the kinds of companies that could be involved?
So this you're talking from what perspective? From the Vadhvan port perspective?
Yes, yes.
Yeah, from the Vadhvan. So yes, I mean, if we look at the offshore, you were talking about Power Grid.
Yeah.
So Power Grid will lay the undersea cable and they will also do the offshore substations. So that definitely will help Power Grid over there as far as, getting these infrastructure projects are concerned. And as far as Suzlon, which is the producer of turbines, offshore turbines, also they will be manufacturing, so they are going to benefit. Inox Wind is there. So right now the maximum capacities that they are building is almost 3 to 4 megawatt size of turbines.
Exactly.
But now this will give them the opportunity to get technology to manufacture almost 10 to 15 megawatt size of offshore. Yeah. So that's what brings the efficiency to this.
Just one question, Vikas. The quantum of orders that are there based on the plans that the government has, even for onshore wind power projects, Suzlon and Inox Wind still have their hands full. Do they have the capacity to be able to go out and execute this newer size turbine?
No, they will have to. They will have to increase their capacity, and offshore wind sizes or the turbine sizes are 15 megawatt, which we don't have that technology right now.
Right now they are dabbling in 3.2 and 4, right?
And even Adani is come up with new ones which are 4 megawatt.
Right.
So you can imagine the difference between 15 gigawatt and 4 gigawatt.
Got it.
So we will have to have participation from Vestas and other global players as well as in this. So that's why it's going to be international competitive bidding.
Okay, so interesting. So these are the big mega projects which are going to, move the economy in that sense. Now, obviously, as with all of these things, execution and the detail to execution becomes the key. But let's just play out for you what the minister was saying. Ashwini Vaishnav, who's INB minister, was making these announcements at the cabinet meet yesterday. Take a look.
इस पोर्ट से एस्टिमेट किया जा रहा है कि करीब 12 लाख एम्प्लॉयमेंट जनरेट होगा. करीब 12 लाख एम्प्लॉयमेंट opportunities will be created by this port. This is going to be a mega terminal and this will be an integral part of the IMEC corridor. जो इंडिया मिडिल ईस्ट कॉरिडोर है उसका एक इंटीग्रल पार्ट ये पोर्ट होगा. इसमें 9 कंटेनर टर्मिनल्स रहेंगे जिसमें मेगा वेसल्स आएंगे, मेगा कंटेनर वेसल्स आएंगे, वेसल यानी शिप, मेगा कंटेनर शिप्स इसमें आएंगी. 4 मल्टीपर्पज बर्थ रहेंगी, 4 लिक्विड कार्गो बर्थ रहेगी यानी पेट्रोलियम इंपोर्ट हो गए, ऑयल इंपोर्ट हो गया, इन सब के लिए. 1 रोरो बर्थ रहेगी, रोरो बर्थ यानी जिसपे गाड़ी आए और शिप के अंदर सीधी बैठ जाए यानी ऑटोमोबाइल एक्सपोर्ट्स के लिए काम आएगी. और 1 कोस्ट गार्ड की बर्थ रहेगी. इट्स गोइंग टू बी अ वेरी बिग पोर्ट. इट विल बी कंस्ट्रक्टेड बाय द जॉइंट वेंचर ऑफ जवाहरलाल नेहरू पोर्ट अथॉरिटी एंड महाराष्ट्र मैरीटाइम बोर्ड. इसका कंप्लीट कंस्ट्रक्शन 2 फेजेस में होगा. फेज 1 जो 2029 तक कंप्लीट होने का प्लान है उसमें 15 मिलियन टीयू कैपेसिटी क्रिएट की जाएगी और उसके बाद में फेज 2 में अनदर 8 मिलियन टन्स करके टोटल 23 मिलियन टन्स की 23 मिलियन टीयू की कैपेसिटी इसमें क्रिएट की जाएगी. ये पोर्ट कंप्लीट होने के बाद में वर्ल्ड के टॉप 10 पोर्ट्स में से एक होगा. दिस पोर्ट हैज द पोटेंशियल टू बी among the top 10 ports in the entire world. That's the significance of this port.
All right. So we talked a bit about the offshore wind energy projects. Let's get to the big one, which is the Vadhvan port. And Anushi is joining us to share key details on this. Yes, Anushi?
Morning, Tamanna. So as mentioned, this is going to be one of the top 10 major ports globally. Now the cabinet has approved the 76,000 crore of investment over here, which will include the land acquisition cost as well. If you have to look at it in a stock perspective, Dredging Corporation comes in mind. Now they do look over the deep drafting and the land reclamation work, so that remains on a watch out. Now currently, while the port is being developed by the Vadhvan Port Project Limited, which is an SPV between Jawaharlal Nehru Port Authority holding about 74% stake and the remainder being held by Maharashtra Maritime Board. We have to see once this comes so while they are responsible for this on a landlord basis, which essentially means that they are going to be looking after the investment and the construction work going on, but going ahead, once this is completed, for the operational basis they are going to be sending the tenders out. So that needs to be on a focal point, and once these tenders are out, there are a bunch of companies which will come to bid for the same. Now for this we have companies like Adani Ports, Gujarat Pipavav Ports and JSW Infrastructure in focus that could potentially benefit, but again this is a very long-term scenario that we are looking at, as the phase 1 completion is expected by 2029. So going forward, these are the companies that we should be watching out for on how it is going to pan out for the Vadhvan port and how it will benefit into these stocks.
Okay, so that's the story with the Vadhvan port. That could be a really big one for some of those port companies. For Dredging Corporation on the offshore wind energy side, Power Grid is one to watch out for. But you know, what is the big picture over here? Anubhuti Sahai, head South Asia Economics Research, is joining at Standard Chartered Bank, is joining us now for more on this. Anubhuti, very good morning to you. Tamanna here, and great to speak with you on NDTV Profit. Just wanted to get a sense from you on what is the glimpse we're getting into where the policy push is for the Modi government. Now, since their first 2 cabinet meetings, this was the second one, we've seen 2 or 3 key announcements. The first was building of 3 crore homes under the affordable housing scheme. And now you have this mega port project announced, this mega offshore wind energy project announced. Is the focus very clearly this term as well, in your view, on the big capex-led infra projects?
Absolutely, Tamanna. I think that was mentioned very clearly. Even if we look at the BJP manifesto, understandably there is a coalition government, but I think the focus on infra capex is unlikely to be diluted. This is also evident if we look at the cabinet allocation. 1/3 of the ministers are the same as the second term, and they're holding the same portfolio. These allocations send a very, very strong message that focus on infra is unlikely to be diluted. What they are doing in terms of roads. So if we just look at the last 10 years, 10 years back, India was building 14 kilometers, now they're building 28 kilometers. I think this focus remains because while a lot of ground has been covered, there is still a lot more which India needs to do. Railway capex continues, and I am extremely, and I'm sure the industry is extremely encouraged to hear this announcement around port development, because if exports of India have to be, have the faster pace and a better reach to the rest of the world, then this will also go a long way. In fact, if you look at the BJP manifesto, there were signals that possibly this can be an area of focus, port and shipbuilding, etc., can be an area of focus over the next 5 years. So the policy continuity story on infra capex remains. The policy continuity story even on having inclusive growth, I think that also remains pretty much intact without losing sight of macroeconomic stability parameters.
All right, so we've seen the big port project, we've seen one airport project, but I want to talk a bit about the offshore wind energy. Can we expect to see much more on the renewable side, the renewable energy push side? Because India also has very ambitious targets as far as clean energy and going to our zero emission norms, etc. What more could we see to this end?
If you look at the zero emission target, that's for 2070. The first target is 2030.
Yeah.
And the renewable capacity addition, again, we just need to see what India has achieved in the last 10 years. Yes, there is doubling, but of course the pace of execution needs to increase further because India has this whole target of adding 500 gigawatts of renewable energy by 2030, and probably that would require almost doubling the pace at which we are adding renewable capacity at this point in time. So that is something, the measures which can go towards fast-tracking addition of capacity, that is required. But I think addition of capacity is just one part of the story. Equal amount of push is also needed to ensure that the transmission mechanism is revamped because the renewable energy is variable, and if just having capacity will not help, we need to ensure that the transmission mechanism is put in place. And if we drill down further lower, then it has to also start with reform of state electricity board, because power tariffs are still highly subsidized, and state electricity boards are also sitting with debt level which needs to be resolved to ensure that if renewable capacity is there, it is getting passed on or transmitted to meet the needs of the economy, and the producer is compensated properly to be incentivized to keep on adding more capacity as the economy grows.
Just one last point, Anubhuti, and the context is also, because we're speaking in this morning before markets open. So just trying to understand which are the sectors which will be completely at the forefront of these projects. Would it be safe to say public sector banks definitely will be in terms of funding some of these projects, apart from your large infrastructure players?
That would be a difficult question for me to answer, Tamanna, but I think it has to be a mix of market as well as, banks, because these are long gestation projects. And for any long gestation infrastructure projects, reliance simply on banks doesn't work. So I think it will be a healthy mix, and it will, market funding or offshore borrowing will also play an important role.
All right. Thank you so much, Anubhuti, for joining us this morning. Anubhuti Sahai of Standard Chartered Bank, talking about what is the kind of impact we could see of these large project decisions. Very quick break. On the other side, Agam joins us with the F&O setup.
Hello and welcome. This is India Market Open. We're taking stock of the futures and options space. It's turned out to be a very interesting day of trade yesterday, specifically when it comes to the Bank Nifty. And while we did see that index take out life highs on an intraday basis, there was quite a bit of intense selling in the last 1 hour of trade. But let's talk about this and let's take this ahead. I'm going to start off with the Nifty. And well, Nifty, of course, had a relatively quiet day, trading most of the day in the red, except for some time where we in fact did see a huge surge in the Bank Nifty. But the Nifty overall did end of the day with about cut of about 0.2 of a percentage point, very little change in open interest. And as far as the Bank Nifty is concerned, well, a whopping 2% up move there. Of course, at one point in time, it was up nearly 2.7%. A lot of that had to do with the fact that it was also the weekly options expiry, with a lot of call writers getting trapped and then being forced to cover positions. Of course, that also led to further, up move as far as the Bank Nifty is concerned. But eventually, we saw it come off by quite a bit distance. Of course, the open interest declined. We move into another weekly options expiry for the Nifty now. Yesterday was a day of trade where we saw a lot more writing around calls. That would be 23,600, 700, 800 specifically. And, when it comes to your overall open interest distribution picture going into today, as you can see, we have the most amount of accumulation in open interest around the 24,000 call. That said, in terms of the lower end, we have a reasonable amount of open interest distribution around 23, 300, 400 and 500 puts. I'd reckon that will be a range of sorts as far as today's day of trade is concerned, with respect to a little bit of a support playing in. But again, these are volatile times. And especially now, a lot of these weekly expiries are also turning out to be extremely choppy. But this is as far as the Nifty is concerned. Let's talk about stocks then. We did see longs in likes of Axis Bank and Coromandel International, shorts in Indus Tower. Of course, we also had a huge bulk deal there. And Grasim and AU Small Finance Bank also looking at some amount of shorts. Among stocks which saw unwinding, we had a long unwinding for GNFC, Hindustan Aeronautics, as well as City Union Bank. Sun TV and Balrampur Chini looking at short covering. Sun TV, of course, also moves out of the F&O ban. So keep an eye on that one. But from there on, let's talk about what we can do with these markets. Well, we have Rahul Ghosh of Hedge.in joining us this morning. Rahul, morning. Thanks so much for joining in. Well, it does seem like the Nifty is looking at a bout of consolidation, but a lot of strength returning to the Bank Nifty. How are you assessing both these indices and what's the way forward?
Good morning and thank you for having me. Absolutely right. You mentioned that Bank Nifty is showing better green shoots than the Nifty. However, I would like to give a word of caution over here that the upside from these levels is very, very limited according to us. I repeat, the upside in the Nifty, we don't see more than about 200-300 points. And with respect to Bank Nifty, we don't see more than 700-800 points. Also, we expect Bank Nifty's up move to not be as fast as what you saw yesterday. And we expect that the up move or consolidation in Bank Nifty to be much slower coming in the end of June and in the July months. So that's the most important point to keep in mind. Also, as you rightly showed, that the call writers are slightly taking predominance right now in 6-7 months where put writers have been the dominant force. You see the call writers slightly trying to make their mark over here, which is another point of caution. The third point of caution would be the India VIX rising yesterday with the up move. You saw India VIX went up 5% when Nifty was up 80-90 points, and that's why the rally did not sustain, and you saw it coming back into the red again yesterday.
On that, Rahul, I believe you have the Bank Nifty on the radar this morning.
Yes, so this time for a change, we have a Bank Nifty structure. Normally, we give Nifty structures. Fairly simple, I beg your pardon, not very complicated. We have an upside bias, but we have a slow upside bias. So we're buying the 52,000 call of the July end expiry, which is trading somewhere around 850 odd. We are selling the 53,000 call and the 54,000 call of July end expiry. I repeat, we buy the 52,000 expiry call. We sell the 53,000 and the 54,000 call. And to hedge the last sold call, we once again buy the 54,000 call of 4th of July. Now, if you notice in this particular structure, we have 2 buys and 2 sells. So it's completely hedged. The margin requirement will be approximately 50,000 rupees, give or take. When does this particular trade make money? This particular trade makes money if Bank Nifty moves up or moves up slowly. Even if it moves up sharply, we are good to go. If it moves up slowly also, we are good to go. The interesting point about the current structure is that if Bank Nifty turns sideways or turns down a little bit, this structure will not lose money. When will this structure lose money? Only when Bank Nifty falls sharply below 50,000. If it goes below 50,000, then you will see this structure losing money. In that particular point in time, we would be rolling down the 54,000 call option, which is our second call option, to maybe a 53,500 or to a 53,000 to get in some extra credit to take care of our risk. Also, the last call, which is the 4th July call, will have to be rolled over either to the 3rd week or to the end of July, depending upon if Bank Nifty is lower or not. The approximate risk in the trade is 1,900 rupees and the reward is double of that, close to rupees 4,000.
Rahul, obviously, the adjustments on this specific strategy will depend on the level at which, traders find themselves at several different points in time from here on until the 4th of July. But what do you think would be an ideal horizon as far as this strategy is concerned? Would it also be 4th of July?
I would say the strategy should play out in July itself and not in June. So traders will have to hold this till July. 2 points to keep in mind while you're doing adjustments for this. If Bank Nifty goes below the 50,000 mark, only, and this happens in the July series, mind you, only then will you roll down your 54,000 call sold and the 54,000 call bought. Otherwise, I don't recommend doing that. Number 2, if Bank Nifty moves up very sharply, then I would suggest to hedge your second sold call. You can maybe buy a call which is before 54,000 so that you get a little more protection on the upside. These are the 2 points traders should keep in mind. Otherwise, if Bank Nifty stays sideways or moves up slowly, or if it moves down slowly, this strategy can give you an exit even before the 4th of July.
All right. Well, Rahul, from what I understand is that the maximum risk that you're assigning to this specific strategy is about 1,900 to 2,000 rupees for every one lot assigned to each of these option strikes as you put. Am I correct? And that would most likely happen should the Bank Nifty edge towards the mark of 50,000?
Absolutely correct. So if Bank Nifty goes below 50,000 sharply, that is where your risk lies. This risk also factors in one roll down where you get about 50, 70 points extra, which is the bare minimum anybody would get if they roll down the sold call.
Right. Okay, fair enough. Well, Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets and also giving us this option structure, which is slightly sophisticated, of course, because it involves two different set of expiries. But what's really clear is that you do have a runway for the month of June and perhaps also the first week of July as far as this specific option expiry, this specific option strategy is concerned. Thanks so much for joining in. With that, it's back to you, Niraj.
Thanks for that, Agam. Well, so that's the derivative picture for you every day. And now let's shift focus to technicals and fundamentals. Start off with fundamentals. Nirav Asher, Head of Equity Research at Latin Manharal, joins us right now on the show. In a bit, we'll get in Shrikant Chauhan of Kotak on the technicals as well. Nirav, good having you. Thanks so much for joining in. Nirav, we were debating what's happening currently in the markets and some of the newsmakers that we have today. And how pharma the last 2 days has been under a bit of a cloud after that pricing concerns report came in. Any thought on these US exposed companies, part one? And part two, added to that, is the warning letter that Sun Pharma has got for its Dadra plant. Now, how closely do you guys track Sun Pharma and what's the kind of reaction anticipated? What's the impact on Sun Pharma?
Niraj, thank you for having me on your show. Good morning. And I think, first of all, as we start off with the pharma sector, if one were to read the commentary of the various companies during Q4, what we have been able to infer is that the India sales have been very strong, whereas there has been a lot of competition in the US markets. There has been a pricing pressure. there has been a lot of competition. The competitive intensity has gone up quite a lot because there are a lot of players in the generic space. So overall, the regulatory pressures have also been going up. So I think the US markets have been under pressure, and I think that's broadly what's been reported by most of the players in the pharma space. And as far as the Sun Pharma is concerned, I think this is likely to have a negative impact because this time around we have a warning letter which has been issued, and if there is no appropriate response to this, then it may also result in an import alert for the company. So I think it's a negative as far as Sun Pharma is concerned.
So negative for sure. Just wondering, Nirav, if you could that be substantial price damage? And part two, would you be a buyer into this weakness? I mean, at some point of time, Sun Pharma may resolve it as well. So would you be a buyer into the weakness?
No, not at this point of time. I think we are likely to see a weak start, definitely, for Sun Pharma. And I think the market will take some time to digest this news.
Okay. Fair call. That's a fair assessment, and thanks for that, Nirav. Let's get in Shrikant Chauhan, Executive VP and Head Equity Research at Kotak Securities as well. Shrikant, we were talking about pharma, and we'll talk about pharma as well, but can't not talk about banks by virtue of what banking has done yesterday. So good morning to you. Do you reckon the strength in the bank Nifty continues, and does that help prop up the Nifty?
Good morning, Niraj. Good morning, everyone. I think, for the bank Nifty, we saw a spectacular rally on the day of weekly expiry. And most of the time on the weekly expiry, we see specific trending activity on either side. The way yesterday we saw participation in private banks as well as in few PSU banks, we are of the view that the bank Nifty is now very close to its crucial, important resistance level. So close to 52,000, the bank Nifty is having huge amount of resistance. And if we see the bank Nifty is crossing these levels, then yes, we could see further more bullishness up to 52,500 or maybe even 52,750. But for the time being, I'm of the view that it is going to consolidate because most of the stocks are very close to their extreme overbought levels. So we could see some correction during the day, some consolidation for next 1 or 2 days of time. And in case if the bank Nifty is again available at 51,000 levels, there we should look for taking some long positions. But for the time being, I think it is better to be more and more stock specific for next 1 or 2 days.
Okay. So then Shrikant, let's be stock specific. What is it that you're recommending in this session today?
I think in that space, technology stocks should be on the watch list. The reason is because we saw a very strong session in last 10 days for IT companies, but at the same time in last immediate 5 days, it was the entire sector was into consolidation mode. And now I think IT sector is also on the verge of giving breakout in the short term. So we could see some rally in IT companies, especially stocks like Tech Mahindra as well as Infosys. In that space, Tech Mahindra looks really convincing bid to buy for because there we are seeing some continuation formation. Based on its technical formation, the next level to watch out for would be 1500 in next few trading sessions, maybe 1 or 2 days. The stop loss should be somewhere close to around 1340 levels. And the other stock which we like is Jindal Steel and Power. And there also, in last 3 days, the stock was just consolidating within the broader range of 1060 and 1020. 1015 should be the stop loss because there also I'm expecting breakout sort of formation, and the broader pattern of the stock is suggesting us that the stock is heading for at least 1300 to 1400 in next few weeks or months. So broader pattern is bullish, and in the short term, the stock is very close to its important support levels.
So those are the two top picks for Shrikant Chauhan. He's looking at Tech Mahindra and JSPL, but some of the other stocks that you should keep an eye on trade today. Mahima joining us with that list of stocks to watch. Yes, Mahima, good morning.
Good morning, Tamanna. So I'll start with Som Distilleries. Well, MP government has suspended the license for its associate company, which is STPL, which is a part of the Som group of companies. Now, the company did come out with a clarification that, it's an associate company of Som Distilleries and Breweries. The company was blamed because the contractors of its associate companies had child labor concerns, and around 58 children, including 20 girls, were rescued from from the factory. The part 2 of stocks to watch has a lot of block deals that took place. The first one is Piramal Enterprises, where promoter stake sale happened. The buyers were Anutham Realty, which are also promoters, but now their stake has gone up to 4.5%, and seller was Sri Krishna Trust, which sold the 4.54% stake. Sri Krishna Trust held around 35.11% before the stake sale, and now their stake stands at around 30.57%. The second one is Gland Pharma, where again there was a promoter stake sale. Fosun Pharma sold around 6.1% of its stake, and now it held around 57.86% equity, and now it holds 51% equity. UBS Principal Capital Asia has bought around 1% shares. Lastly, there is Sansera Engineering, where client Ibn Limited and CIGP LI Employee Ibn Limited have sold their entire stake of 9.43 and 2.29%, and a lot of mutual funds have bought combined have bought the entire stake. So these are the key 4 stocks to watch out for in trade today.
All right, thank you for that, Mahima. So those are some of the stocks on the radar, but I would also put some of the winners of yesterday. And Shrikant, keen to know your view on this. Very good morning to you. Fertilizer stocks and sugar stocks, both on a complete runaway yesterday. Do you think, some of those counters due for profit booking, or you would add on positions ahead of 2 key events, the GST meet as well as the budget, of course?
Yeah. Good morning, Tamanna. I think, this fertilizer stock especially, they are very close to their, I'm going to say, breakout levels. So most of these stocks have crossed their previous levels like Chambal Fertilizer or RCF. But if we go through with stocks like GSFC or GNFC, then there also we are seeing a good amount of price-based, time-based consolidation in last few months. So in this particular space, we like Deepak Fertilizer, which is currently around some 650, 630 levels. There we are specifically bullish based on its monthly and weekly formation. I am of the view that the stock is heading for the levels of at least 750, 760, and it is like tough to take specific short-term trading position in the stock. But if there is a medium to long-term view, at least view of next 1 month, then certainly we should look for adding Deepak Fertilizer at current levels around 640.45 with a target of 750, and we can keep stop loss somewhere close to 600 levels. The other stock on which we are bullish is GNFC. Currently, it is in the ban period of FNO, but otherwise in the cash segment, if we take any long position, then there we are seeing the stock to rally towards the levels of 775, 800. And here also we can keep stop loss somewhere close to 650. But I think, yes, this space is going to do well. And from the sugar space, we like Renuka Sugar because there also volume-based activity picked up in last 1 month. And based on its technical formation, the next level to watch out for would be somewhere close to 65 or 66. It has spent a lot of time around 45, 46 levels. So 45, 46 is the best level for the stock. But on the higher side, there is a possibility of hitting 65 or 66. So risk reward ratio is quite great.
All right. So keep an eye out for some of those sugar stocks today as well. And remember, one more indication there for sugar stocks. We're talking about just the overall agri boom, but this was interesting, Niraj, that Sharad Pawar has written a letter to the Prime Minister saying that please ensure sugar farmers get their due and you curb exports. Now, why would anyone listen to Sharad Pawar considering he's not in the government? But remember, ahead of Maharashtra elections and for sugar farmers, he does have a voice that could be listened to. I think that's one of the triggers we saw for sugar stocks yesterday. Very quick break. We'll be back with pre-open rates and a lot more. Stay tuned.
back with India Market Open right here on NDTV Profit. The pre-open rate's about to kick in, but we're talking about some of the newsmakers in the session. Now, we're talking about banks with Shrikant Chauhan. Nirav, fundamentally, what is Latin Manarlal Securities advising their clients to do? Which banks do you recommend a buy, or financials which you recommend invest in? Where is it that you are recommending profit booking? Nirav, the question is for you.
Yeah. As far as the banks are concerned, I think we've been very consistent. We've been recommending HDFC Bank, State Bank of India, and ICICI Bank. And amongst the smaller banks, we've been recommending DCB, Federal Bank, Karnataka Bank. So I think we've been consistently advising clients to accumulate at the lower levels. In the last 1 month, we've seen HDFC Bank go up by around 13 to 14%, whereas ICICI Bank and State Bank of India have been quite stable. But we are advising our clients to hold on to their positions for the medium term to long term.
Okay, DCB from the smaller size names, and DCB could be interesting today because amongst other things, Motilal Oswal as a brokerage house has raised the target price as well. So Latin Manarlal likes them, Motilal Oswal likes that stock as well. It's not a stock that has necessarily performed the best. I mean, if you look at DCB over, let's say 5 years, I may be wrong here, but let's pull up the 5-year chart for a DCB if we can. And it's not a stock that's really created wealth. You know, why a DCB? I mean, I understand private banks have underperformed PSUs, but they've still given positive returns. DCB's gone nowhere. Why this confidence now?
We feel that there is a potential to pick up. I think the branch network is also moving up. They are trying to make amendments. And going forward, I think the margin trajectory should improve. And at this price levels, I think from a valuation perspective, it is looking quite reasonable overall. Hence, we have recommended this stock.
Okay. Interesting. Okay. Fair call. So this is the view on banks and DCB in particular. Some of the stocks we've spoken about, which were high flyers, the likes of sugar as well as fertilizers with Shrikant Chauhan. We've also spoken banks with him. What could be interesting is auto ancillaries. Shrikant, the last few days, and even in yesterday's session, we had a Sansera move up 5%. The last 2 or 3 sessions, Ramkrishna Forgings has done very well. Some of these auto anchs have stood out. Any thoughts on any specific name? And if you haven't bifurcated them by the sector, then I want a specific view on both Sansera as well as RK Forgings.
See, I think now again we are seeing some renewed buying interest in those companies which have done really well in last 6 months. But after consolidating again, they are preparing for the next upmove. So in that space, I think this RK Forging looks really interesting. The reason is because we saw good amount of price-based and time-based consolidation since last almost 6-7 months between the range of 600 and 800 on the high side. And in last 3 days, if you see the volume indicator, then we saw good amount of price retracement along with rise in the prior volumes. Based on its technical formation, I think it is now preparing for the next level to watch out for would be, and which is somewhere close to 1100 or 1150. So it's a very strong candidate to buy for. I think, yes, if there is any correction, we should look for adding RK Forging to the positional investment portfolio. And the other stock on which we are bullish is Uno Minda. And there also, even though we saw spectacular rally in last almost 1 month, we are of the view that after consolidating between the range of maybe 1070, 1080 on the higher side and 1000 on the downside, the next level to watch out for would be 1350 or 1400. So it's a very strong candidate to buy with a medium to long term view, but with a very short term view, I think if there is any correction, then close to 1000 levels, the stock is having support. I think we need to be more and more stock specific in this particular space.
Okay, let's look at what's moving pre-open, and definitely Uno Minda is one of them. In fact, this entire auto anch space is seeing some action. Remember, there's a Goldman Sachs note which is positive on Uno Minda and on CE Info Systems. In fact, their target price for CE Info Systems is 40% up from where it is right now at 2,800 rupees. And you're seeing that stock already move up 7%. What else is moving this morning? Sapphire Foods, but that's because of the stock split. So that's one to keep in mind. Suzlon, we spoke about those two wind energy projects which have been given viability gap funding by the government on off the coast of two states, Gujarat and Tamil Nadu. Suzlon could be a proper possible beneficiary. We talked about that this morning if you joined us for the trade setup. So Suzlon and Inox Wind, pull up Inox Wind as well, both responding positively in opening trade, and see Infosystems now about 9.5% up. In fact, Nirav, let me come to you on some of these players and talking specifically about the wind energy play or the renewable energy play. Let me broaden it up for you because you're already seeing Suzlon and Inox responding quite positively. Do you see more impact here if you're looking at a bet to ride on capex and policy initiative? Do these two players come to mind?
Definitely they come to mind because I think by 2030 the government is aiming at a renewable energy capacity of 500 gigawatt. So I think there's going to be a huge amount of investments in the wind energy space as well as the solar space. And I think in the wind energy space, these two players have a kind of a first mover advantage. So I think both Suzlon as well as Inox Wind are definitely stocks to watch out for. Now, going forward, the focus will be on how they are able to execute the projects because I think execution is going to be a very important part, and the cash flow management. That is going to be, again, a very, very strong area to look out for going forward.
Okay. Yeah, for now, Suzlon is up 5%. Let's see. This opinion is divided simply because some people talk about how some of these companies may not even go in and bid for these because the costs are prohibitive. But if they just have to supply the turbines, then the costs don't matter to them as much. So that's to be borne in mind. For now, they're starting off higher. The other one to look at is Inox Wind Energy, which viewers remember is the entity with which Inox Wind is going to merge. And the swap ratio is in favor of Inox Wind Energy shareholders. So if you're indeed constructive there, maybe Inox Wind Energy could be a thing that you want to bet on. So keep that in mind if you are constructive on the wind energy turbine suppliers like Suzlon and Inox Wind. Okay, let's talk more about some of the key brokerage notes. Harsh joins in with a key note in today's session. Harsh, I believe it's a Goldman Sachs view.
Well, yes, absolutely. On MapMy India, Niraj, Goldman Sachs extremely bullish, 39% upside from your expected target price of 2,800 on MapMy India. What they believe is that the company is well poised to benefit from an early leadership position in fast growth end markets. Now, where would this growth really come from? The company has an 80% plus market share in the auto OEM navigation software components part of things. What they are looking for is, or what Goldman is forecasting is a 38% revenue CAGR over FY24 to 27 in terms of the top line, as well as what they are suggesting is margins will remain in the 38 to 41% kind of band. Of course, catalysts or what they are really pushing their weight on is pickup from Hyundai and Kia contract wins, pickup in faster growth with regard to where the IoT business is concerned, as well as in EV and EV adoption as well. Some of those catalysts likely to help CE Infosystems. It's of course not exactly an auto anch play, but what Goldman seems to be leaning on is that this could be a very strong auto anch play going forward, at least over the next 2 to 3 years. Of course, trading not cheap at all, 53 times expensive, but in terms of the growth expectations, very strong, and that's probably why Goldman has ascribed almost a 40% upside. So that's one. The second one is on Indian PSUs. Motilal Oswal prefers SBI, Coal India, GAIL, HPCL, Bank of Baroda within the PSU basket. They continue to prefer these names. The PSU index, of course, has rallied 100% plus since December of 2022. They believe that strong business narratives are going to continue. Growing order books is driving the re-rating further, as well as loss pools have reduced considerably. Now they're expecting profitability to improve and continue, and localization and higher capex will likely drive the re-rating and continue the re-rating with regard to where PSUs are concerned. So keep your eye out on that pack, as well as, of course, CE Info Systems.
Really divergent. I think the note that really matters today is, Harsh, thanks for that, is this Goldman Sachs on CE Info, because look at the impact that it's had on the stock. Now, both technically and fundamentally would love to know about this. Technically, Shrikant, it's had a big uptick, right? Difficult to chase a stock like this when it starts off 10% higher?
Yeah, it is. In fact, if there is any upside gap, then one can look for it. But otherwise, I'm of the view that in the month of November 2023, the stock was very close to 2350, 2375 levels. So till the stock is not crossing 2400 levels, I'm of the view that it is going to find some resistance very close to its all-time highest levels. So currently it is opening somewhere close to 2200, 2250. But from here, then the upside left remains only 5 to 10%. So it is better to stay away. But yes, if there is any correction during the day, close to, let's say, 2100 or 2050, then we should look for adding this stock, because the broader pattern of the stock is suggesting us that it is consolidating and it is going to form a triangle consolidation formation. So eventually we are going to see upward breakout, because it's a bullish continuation formation. And in that, Goldman has added some fundamental view. So broadly, I'm of the view that the strategy should be to buy on dips, but at these levels, I think opening at higher levels, let the stock cross at least 2350, what was its previous highest level, or otherwise buy if there is any correction.
Nirav, your take on a CE Info Systems, and if you want to add Uno Minda as well, only because GS has a positive call on both.
So with respect to CE Info Systems, I think the view will be that it's a niche company, but I think the valuations are on the higher side. So I think it will be better to wait for a correction before we enter the stock. But not so with Uno Minda. I think it remains an attractive buy even at the current levels.
Okay, Uno Minda is a buy, you're saying, at the current levels, Nirav?
Yes.
It's already 12.5% up after the pre-open session has closed. Shrikant, I'm not sure if you gave a call on Uno Minda, but at 1186, do you like it? Let's revisit in case you already have.
No, we discussed on the stock, and I was of the view that if there is any correction close to 1000 levels, then we should look at adding this stock. But otherwise, it is better to stay away. But broader pattern of the stock is suggesting us that it is heading for at least 1400 sort of levels.
Okay, so 1400 is possible on an Uno Minda. Meanwhile, what's not working today in the pain category is definitely Sun Pharma. We spoke about that earlier in the show. So that's 1% down, and in pre-open, DRL also looking pretty bad. It seems like another day, though, I would say, Niraj, for your financials. SBI Life, Kotak Mahindra Bank, ICICI Bank, HDFC Bank, IndusInd, Shriram Finance, all of them doing very well. Nirav, now I know you have a view on the private bank space, but if I take this broadly to other financials as well, what are you liking the best right now? Are you veering towards the NBFCs as well?
Yes, we have been looking at select NBFCs also, and I think we have been looking at a few housing finance companies. We like LIC Housing Finance. We've been looking at Canfin. We've been looking at PNB Housing Finance, and amongst others, I think we like L&T Finance Holdings. So these are few stocks which we have been recommending to our clients.
And what about you, Shrikant? Any of these that you like from the BFSI space?
Yeah, in that space, IDFC First Bank looks really interesting. The stock is forming some breakout sort of formation. It was into consolidation for last several months, and now it has absorbed the selling pressure at 80-81 levels. So from here again, the stock can move to the next levels of at least 90-95. So at this level, it's a great risk-reward ratio for taking any short-term as well as medium-term position.
Okay, one last call before we hit the opening rates, Shrikant. One top pick for this morning?
Yeah, I think IDFC First looks really a strong candidate to buy for. There, I'm expecting furthermore continuation in today's date because yesterday we saw rally in all large cap companies. So maybe today we see some activity in mid cap or small cap banks.
Okay, but must say IDFC First too yesterday had a good move. So a bit of a breakout move. Shrikant believes that is the call. That is the stock that you should bet on at the mid-sized end of the market, and that is a stop call as well. So watch out. Banks, remember, have had a good day. Today too, some of the likes of Kotak Bank and some of the others have started off well or starting off well. So banks probably the key to the markets moving on higher from here. And even if the market stabilize, maybe the bank Nifty does well at the expense of some of the other stocks. So who knows? Let's wait and watch. Remember, HDFC Bank is no longer at 1450. It is at 1670. So there is some distance that some of the private banks have already traveled. Let's see if there is more in store. But here come the first rates this Thursday morning, and watch out for banks in particular. But the index per se starting off about 28 points. So very, very flat. Let's see the banks and if they are revved up in the session today. Not really, but a third of a percent on a day when the index is completely flat is not bad. Is it happening at the expense of IT? I don't know. We'll get to that in a moment. Mid caps, the mid cap index 0.2%, small cap index 0.27%. So lying low, really. IT sulking a little bit. Let's get the heat map up on the screen and show you what's moving and what's not. Banks should be right up there. Financials essentially. So HDFC Bank 0.5%, Kotak Bank 1.6% by the way. SBI Life about 1.5% as well. So there are these few banking names which have done well. Bharti Airtel maybe on that CLSA note is doing well. Adani Port is revving up a little bit. Shriram Finance, yesterday's loser, comes up a little bit. And it's almost balanced. Maybe a bit more in terms of losers than gainers. But kind of there. On the losing side, no surprise, Sun Pharma is sulking in trade, 2 percentage points higher. This was kind of predictable. What is also sulking is other pharma stocks, Dr. Reddy's, Divi's, Cipla. So pharma, the last 2 or 3 sessions, and rightfully so, are under a bit of pressure. There is Eicher a little soft today. But yeah, that's the long and short of it. I think more red than green definitely on a flat day. Sun Pharma, Dr. Reddy's losing out. So pharma certainly in the negative side, and on the gaining side it's banks. Look at Kotak Bank now, 1.7%, and it's strengthening as the morning goes by, but HDFC Bank not far behind. Yes, in terms of percentage gains lower, but still 0.6, 0.7%, so not bad going. But clearly Kotak Bank with 2% gains, Tamanna, the key in the index stocks this morning.
Yep, absolutely. I'm not seeing too much action even on a power grid, and that's about 0.5% down. But pharma in the red today, BFSI having a second good day. But let's look at what's happening in the broader markets very, very quickly. Pull up the mid cap and the small cap indices on the action there. Just completely flat to positive, mildly in the green is what I would say. Same for the small cap 250. Like we've been saying for most of this week, action concentrated in a few pockets, and we're identifying them for you this morning. Let's start with some of the stocks which are in focus. So KEI Industries is something we've been talking about. They are having strikes at 2 of their facilities. Their operations are losing about 8 crore rupees per day. Their stock was 5.5% down. Still down in opening trade, but not by that large an extent. Sapphire Foods is the other one in focus. Remember, that's because of a stock split. 1:5 stock split has been announced. Stock is 6% up. So Sapphire Foods, for a second consecutive trading day, is seeing a positive response. Uno Minda and CE Infosystems. In fact, I would say CE Infosystems might end up being the stock of the morning. Uno Minda as well. Goldman Sachs has a note out. Targets 1350 for Uno Minda. Even more. GS, Goldman Sachs is even more positive on CE Infosystems, aka MapMy India. If you know it better by that name. Their target price is 2,800, almost 40% up. The stock about 9% up in opening trade. Suzlon and Inox Wind also on our radar this morning, because remember, we've been talking about the impact of the government coming in with viability funding gap funding for offshore wind energy projects, 2 wind energy projects. If you want an exposure to that, I mean, these are pretty much the 2 big options in the market and in the listed space. So Suzlon and Inox Wind there in focus this morning. Tata Tech is the other one that we're talking about, but this, is probably seeing a bit of a negative side. Goldman Sachs is a little worried about Tata Tech, not very positive. Their concerns is with their dependency and over dependency on one client, which is the Vietnamese car maker, EV maker. So that's Tata Tech for you, but not too much of a negative reaction. Office Solutions is the other one that I just wanted to talk about a second. We've not addressed it so far, but remember, Office Space listed recently. They put out their quarterly numbers. Their Q4 numbers are showing a revenue increase of 45%, EBITDA up 40%, and net profits at 1.4 crores. Why this is exciting is because this is versus a net loss of 13.8 crores. So a bit of a turnaround story there for a recently listed company, and Office Space seeing a 6% bump up this morning. That's interesting for several reasons, Niraj, because if co-working spaces are back, it's telling you a larger story there.
But, you know, I wonder if actually it'll be interesting to see what some of the other pockets, not something in the listed space, but unlisted space might be doing as well. So that's certainly a very interesting point. By the way, Aegis Logistics has some gains to itself, so keep an eye out for that too. There is Brigade, which has got some gains. Suzlon about 3.5%. PNB Housing duly reacting, 4.5% lower. In fact, we should try and pull up Mass Financial as well and see if that is reacting negatively too. No, Mass is not. So remember, a QIP in a banking, in a financial stock adds to the book value of the business, and a successful QIP will actually be construed very positively. So I think that's what's happened in Mass Financial's case. What is correcting are PFC, REC. So those are a couple of stocks along with maybe Cochin Shipyard, Bharat Dynamics, etc. So some cool off in the PSU names in the session today. Delta Corp, by the way, 2.5% higher. Praj Industries about a couple of percentage points higher. So that's the long and short of this. But banks certainly seem revved up. Kotak on account of the Macquarie note on financials. Now, Shrikant, opening thoughts and a quick word for somebody who's gone long on the Bank Nifty at the start of the trading day yesterday. Would you continue the longs there? And a word on Kotak Bank as well.
Sure. I think, see, like for any long positions on Bank Nifty, it is better to take profit, because I am of the view that Bank Nifty is going to consolidate within the range of 52,000 and 51,000 on the downside. For the Nifty, there also I am expecting a minor correction, because yesterday, the way we saw sell-off in last half an hour of trading, I think it is heading for the levels of at least 23,400 or 350 levels. So in the short term, I'm going to say on intraday basis, we could see some correction. And in that case, it is better to take some profit on Bank Nifty. But specifically for, I'm going to say BFSI sector, in that space, we like AB Capital. The reason is because here also the stock has completed its corrective pattern. It is on the verge of crossing its previous highest level of 250. Today also it is holding well above its important support levels of 235 to 237. So based on its technical formation, with a stop loss at 230, we should look for adding at current levels more on dips, because there I'm seeing the potential of 300 in next few weeks or months. It will take some time, but in the near term, we could see the levels of 260, 65. So it's a great risk reward ratio for buying even at current levels and on dips.
Shrikant, what's your take on all of your PSEs? They're seeing a bit of a drubbing today in morning trade, in relative terms, of course. But some profit booking there. PFC, REC, both about 2.5% down, and HAL down for a second consecutive day. I reckon so would be all that defense pack, your Cochin Shipyards, Mazagaon, etc. All of them seeing a bit of pressure. Anything that you would pick up at these levels?
See, I think all these stocks are into strong momentum, and whenever they are crossing their previous highs, and to say swing highs, we saw a good amount of price retracement as well as volume retracement. I'm to say increase in the volumes. So the overall setup is suggesting us that they are going to do well for next couple of weeks or months based on their technical formation. But the ideal strategy should be to look for adding them if there is any correction. Yesterday we saw some correction, but this time I'm expecting stock to correct furthermore, little bit 5% more from current levels. So close to 4,900, 5,000 levels, HL looks a very strong candidate to buy for, with a view of next few days or few weeks. So close to 5,000 levels, the stock is having support. And other stock which we like is Power Finance Corporation. The reason is because broader pattern is turning more and more positive. And whenever there is correction, we see a good amount of buying interest. Today it is down by nearly some 3-4%, but close to 480 levels, the stock is having excellent support. I think this stock is also going to do well in next few weeks or months. So with a view of next few weeks or few months, we should look for adding PFC as well as HL.
RateGain also in focus. They've had a block trade of about 1.59% of their equity. The stock is about 6.5% up. So RateGain looking interesting today. Nirav, are you tracking RateGain and any view on a delta? We talked about delta briefly before the markets opened, and the stock seems to be having a second consecutive day of some up move. Let's pull up delta also for our viewers. Any call on both these counters?
I think I would like to stay away from delta because this is a call on basically an event which is scheduled for around the GST Council meet on retrospective taxation. So I think would stay away from Delta Corp. And RateGain, I think it's an exciting prospect. It's a niche company and benefits from the travel space, travel related space. So while the valuations continue to be rich, I think still there is a potential for upside, considering the huge potential for the travel and tourism space.
Okay, what else? We just looking at stocks which are reacting positively. I think the Inox Twins and Suzlon are doing okay for themselves. There is some strength out there in those at least. Now, Nirav has given a positive view there. Shrikant, can I come to you? Suzlon has just broken past 50. Inox Twins also doing okay. Do you like these on the charts?
I think in this space, yes, Suzlon is very close to its breakout levels. In fact, it has spent a lot of time below the levels of 52, 53. But now it is trying to surpass this level. So based on technical formation, the next level or next extinction level is somewhere close to 56, 57, which is very close by. But if we consider the longer term pattern of the stock, I'm to say quarterly chart or monthly chart of the stock, then I think it is into pullback mode. And if the pullback continues, because the formation is suggesting us, then based on that, we could see the levels of maybe 75 or 80, which will take time. I'm not saying that it will come in the near term. It will take time. But broadly, I think this stock will remain into higher top, higher bottom series. And whenever there is a correction, I think the buying will emerge. So based on technical formation, it's a buy.
Okay. Before we let you go, Nirav, Ashar, one key mid-cap fundamental idea that you may have shared with your clients recently with the rationale for why so.
So we recommended Deepak Fertilizers to our clients. The reason being that last year was a washout year for the company. The industrial chemical segment, the mining chemical segment, as well as the fertilizers, all were under pressure. But this time around, I think technical grade ammonium nitrate, nitric acid, and there has been backward integration, which has been achieved by the company successfully. And the fertilizer segment is also likely to make a comeback. So I think the valuations at this point of time are looking very attractive, and there is a huge upside potential in this stock. So we recommended this stock particularly to our clients.
Why this upside potential, Nirav? I mean, do you reckon earnings will go up to a particular level? Any numbers?
Yes, we think that there's going to be a recovery in all these segments, the technical grade.
Yeah, which you mentioned. What will it do to numbers, Nirav?
It can have a substantial improvement in the numbers because, as I told you, last year, all these segments performed very badly. That was a dismal performance. But I think this time around, there's going to be a huge bump up in the earnings. So I think we can expect a substantial upside from the current levels.
Sorry, just Nirav, I'm being pushy on this, but our viewers would love to know when you're saying substantial, what are the kind of upsides that you're looking at?
At least 30% upside from the current levels.
Okay. So about 25 to 30%. Lest viewers scoff at 25, 30%. Your fixed deposit earns you 5% post-tax.
Who is scoffing at 25
and
to
people 30%? Are so used to a HAL.
I'm who these people are?
People are so used, or some people are used to seeing a Paris defense go up 50% in 3 days, and they say 25% in a year. Come on, who wants those returns?
But remember, big difference between those who are watching the screen and saying, wow, and those who actually have the stock at that price in their portfolio. Those are not the people getting excited. They're the ones who
most certainly
planned well. Anyway, on that slightly philosophical note, we will thank Shrikant Chauhan and Niraj for joining us this morning. Thank you so much. We'll take a very short break. But on the other side, we have a special focus with Samuel Joseph Jebaraj of the National Bank for Financing, Infrastructure and Development. Now, what we're trying to understand is all of these big projects have been announced by the cabinet. How are they going to be financed? So NAPFID on the other side on all of that and more. Welcome back. A bit of sideways trade and consolidation trend in the markets today. Bank Nifty is still in the green, but that's more an exception than a rule if you look at what's happening in the broader markets and in the indices also. The Nifty mildly in the red, flat, nothing massive happening there. But the Nifty and Sensex not moving too much. The mid-cap index now inching up to some extent. What's working this morning? It's a lot of focus on brokerage notes and their impact. So we talked about Kotak Mahindra Bank out of the top liners because of the Macquarie note, and Kotak Mahindra Bank, let's pull that up once again, still up in the green. In fact, we should pull up the Nifty heat map and see what's working this morning. Yeah, Kotak Mahindra Bank about 2% up. It's still a day of financials. It's still a day of financials and a bit of a rotational play there, actually, that you're seeing. So an SBI Life, HDFC Bank, Kotak Mahindra Bank, all responding well. And a Hindalco now climbing up in the last 15-20 minutes of trade as well, but more reds than green on the Nifty, as you can see. In the broader markets, though, the focus on auto anch players continues to be pretty sharp. But specific stocks, there's this Goldman Sachs note out, which is very bullish on CE Info Systems. That's Map My India for you. And in part because of the kind of tie-ups they have with Hyundai, Kia, etc. That stock doing very well this morning. So is Uno Minda. Remember, even as the third variety or the third version of FAME gets rolled out, there will be more and more push and incentives for EVs. But whatever you're making, the auto anch players are definitely out there and looking at benefits coming in. So auto anch once again in focus this morning. Not so much Tata Tech. Tata Tech, though, in a bit of a downside despite all of the overall positivity about auto anch stocks, and that's because of the Goldman Sachs note as well, which looks at a target price of 900 rupees. So that's quite a way down from where Tata Tech is trading right now, about 1.5% down. But these are some of the pockets that we're seeing, Niraj, this morning. I think your Sanseras, your micro cap seeing more action than the broad indices or the top line indices.
Yeah, most certainly. But banks catch your fascination, isn't it, Tamanna? And it's good that we'll be getting in Vishy in on a conversation as well, because it's just important to try and put this into perspective. Because one is the fact that typically FI flows coming in leads to banks doing well. I suspect that today might be a green day in FI flows as well. But fundamentally, based on what's happened in FY24, do things look better in FY25? Maybe that's the other thing. Actually, let's get my colleague Vishy in this conversation as well. Vishy, just based on what you've seen in FY24 numbers, etc., and the guidance being given, is FY25 a banner year for private banks?
So, a couple of things. So, one of the narratives that was prevalent in FY24 was the fact that deposit growth is just not picked up, and that's not really helping banks, shore up their liquidity, and therefore they're going for higher cost funding, which is leading to margin compression. Now, FY25 has started with a sort of a positive note, because that differential between credit growth and deposit growth has shrunk. What was about 800 bips has come down to about 400. So analysts are expecting that this is going to get covered at some point in time around Q2 or Q3, and then you will see things back to being happy-go-lucky. With private banks, my only concern is their high CD ratios. Their credit deposit ratios are being considerably high, which basically means that if you want to push up deposit growth, you have to slow down on credit.
Right.
And that sort of, balances things out, the positive and the negative.
Well, let's wait to know how that shapes up. By the way, so that's banks, the first point. Just before we get in our corporate conversation going, get in my colleague Mika for a very quick perspective on stocks that might benefit from the large outlay for offshore wind power. Mika, take it away.
Yes. So let me just tell viewers for context what the latest government union cabinet has approved. They've approved a viability gap funding scheme, which is for the implementation of offshore wind energy projects. Now, we have had the national offshore wind energy policy since 2015. It's been announced since 2015, but nothing concrete yet. And what the viability gap funding does is a move to set up the offshore wind projects. Now, the total outlay is 7,453 crores. This includes 6,853 crore for installation and commissioning of 1 gigawatts of offshore wind energy products. This includes 500 megawatts each. This will set up 2 offshore wind projects, one off the coast of Gujarat and one of the coast of Tamil Nadu. And it also includes a 600 rupee grant for the upgradation of 2 ports. Now, what is the VGS scheme does and what it tries to do is that the government trying to give support to reduce the cost of power from the offshore wind projects, which is one of the major disadvantages of offshore wind project. The cost of setting up and the cost of electricity is higher, which is why wind companies have stirred away from even considering the space as a viable opportunity. One of the key beneficiaries announced by the PIB release is Power Grid Corporation. While the projects are going to be set up by private developers, and we'll only come to know the beneficiaries once the bidding process is over and the winning bidders are announced. What Power Grid Corporation will do is they'll the power excavation infrastructure is what they're going to put up. This includes offshore substation and also the underground cables that are needed for the infrastructure.
Right, Megha, thank you so much for that. Now, let's move on to a conversation that we've been promising our viewers with Samuel Joseph Jebraj, the DMD for Lending and Project Finance at NAPFID. Mr. Jebraj, welcome. Samuel, sir, you and I have been speaking for some time about the fact that infra financing at some point in time has to pick up. The first indications of that seem to be coming in from the Union Cabinet's decision last evening. Two major projects that they've announced. The first one with a large port capacity that they've announced in Vadhvan in Gujarat, as well as you've got about 7,400 odd crore worth of a wind energy, offshore wind energy viability gap funding that they've announced. As a lender looking into these long-term projects, what is your view what is FY25, 26, 27 looking like for NAPFID, sir?
Thank you, Vishwanath. I think this is a very major policy initiative being announced for the energy transition of our country. We have been talking about offshore wind for a long time. In fact, the policy came in 2015, and the initial surveys, the report came in 2018, and then the policy for leasing the offshore seabeds came in 2019. So the viability gap financing, which has been announced yesterday, is a very, very major initiative. In fact, if all of us recall, initially, when even solar projects started, we started with 15 rupees tariff for a few years, and then it tapered down to 5 years. And today, as we speak, the potential assessed for the Indian coastline of 7,500 kilometers is about 70 gigawatts. And this 1 gigawatt, what the cabinet has announced, is not a very small project at all, given by going by global scale of such projects. So it's a very major initiative, and this, let's say, 6.8 crore subsidy or upfront which will come will make the project viable, because onshore wind projects have a PLF of about 33-35%, and offshore wind projects have a PLF of about 50%. So if you adjust for this higher PLF and the 6.8 crore upfront VGF, then the project becomes very viable even at current power purchase agreements.
Okay. As far as NAPFID is concerned, the state of project finance in India so far, I mean, after a period of considerable consolidation, you've seen some amount of stability. It's not really taken off, in the terms of how 2011 or 12 was looking like. But do you think that maybe now is that sort of inflection period?
I think so, Vishwanath. In fact, most of the lenders today who were keeping away from infra lending have come back to infra lending. Many of the names you will be aware. Even last week there were reports that some of the lenders who have completely kept away from infra lending have come back, because the ecosystem has changed a lot. Today, if you look at probability of default for corporate lending vis-a-vis infra lending, the probability of default is much lower for infra lending. And the risks around infra space, what we had seen in the earlier cycle, to a large extent have been mitigated. And I think most of the lenders will become comfortable. Of course, we as NAPFID have always been comfortable in this space, and that's how we have been able to underwrite large exposures. But I think most other lenders also will participate in this now.
Got it. Samuel, hi, this is Niraj here, just chipping in for one question. I heard you mention about how with the viability gap funding, some of those offshore wind projects might also become viable. What about the ecosystem and the appetite for doing this? Because as I understand, the Indian players which are into the suppliers of the turbines, etc., are not necessarily having the kind of technology to cater to 15 megawatts of those turbines. So will the offtake of financing for such projects be rapid, or will it develop over a period of time?
Hi, Niraj. I think your question has two parts. First is the domestic ecosystem for manufacturing such turbines. Today, we don't have. In fact, the onshore turbines today, we have perfected the art of the 3.3 megawatt turbines, which we see in most of the projects today. And some 5 megawatt turbines have also been developed, all for offshore. But all for onshore, sorry. The offshore turbines have a capacity of about 20 megawatts or so. 16, 17 megawatts today are available. And that will slowly develop. So the ecosystem today, we will have to import these turbines, but over a period of time, I think we will have domestic manufacturing capacity as well. As these projects are bid out, I think financing also will be made available by NAPFID and the other institutions.
Right, sir. One quick question. In terms of the current state of regulation within the project finance space, now, of course, the RBI has come out with its draft regulations. The final guidelines are not out yet, but they're suggesting a higher upfront provisioning for projects similar to these. Now that we're talking about project finance finally taking off, do you think that this might become a bit of a factor for hesitation for the lenders in the ecosystem?
Vishwanath, all of us agree that in good times, we will have to make provisions for bad times, because good times will not last forever. And the entire banking system is aligned with what the RBI is trying to implement. So there are no there are no doubts about what the RBI is trying to do. However, the method of doing that, even if this were a precursor to the expected credit loss model, maybe the method of doing that may have to be calibrated a little. All of us have given our representation to RBI, and I think RBI will be considerate in looking into some of those recommendations.
You mentioned earlier that lenders who were so far keeping away from project finance are probably looking at it now. But like the last cycle, is it largely going to be public sector led, government institutions, banks looking at these financing options? Or do you think that your private sector players, because obviously if you're talking about long-term financing, apart from you, banks are the only other option. So do you think that the private sector will probably step in to fill that gap?
Private sector is also stepping in right now.
So that's only likely to improve further. That's what we're looking at.
It should improve.
NAPFID talked about a 1 lakh odd crore sanction pipeline. I mean, additional 1 lakh crore, from 1 lakh crore in FY24 to about 2 in FY25. Are we on track? I mean, yes, FY25 is just been a quarter since it started, but do you think we're on track as far as that number is concerned?
The pipeline is very strong, Vishwanath, and hence I think we should be able to surpass that target. And most of this traction for the pipeline is coming from the roads and the renewable energy sector.
Right.
Of course, there is a lot of proposals from the other, like data centers, warehouses, even green hydrogen. Some inquiries have already come in, but I think major traction is coming from renewable energy and roads.
All right. Thank you so much, Mr. Jabaraj, for joining us. That's an interesting look at how the financing will work out for all of this. And this was the NAPFID representative that was speaking to us. What I also found interesting, Vishy, is that he's saying private banks will come in, but to what extent and why should they? Why would they be interested in really coming in is part of the question that we've
had a prolonged period of retail growth. Maybe it's time for your wholesale guys to step in at some point in time and try and build that business as well. Private banks have kept away from that, in terms of large-scale projects, but maybe now's the time.
Yeah. So that would be interesting to watch. Thank you for that, Vishy. We'll take a very short break, but we're discussing this story in greater detail on the other side as well. We'll be joined by BNP Paribas' Priyankar Biswal on the other side. He's talking about industries, metals, logistics, and what is the kind of impact we'll see of these cabinet decisions? All of that when we return. welcome back. Our focus on India industrials, logistics and metals. Priyankar Biswas is joining us for more on that. Priyankar, hi, great to have you on NDTV Profit, and what a great day to have this chat considering the kind of announcements that we've seen yesterday from the cabinet. Very clear capital goods infra play there. So let me begin, with your take and how you have viewed some of these announcements and the trickle-down effect and impact we could have on listed players.
Thanks for having me here. So we had actually highlighted, let's say, very recently when we had put out a report on L&T, like sometime before, that probably what is going to be the direction of the government going forward. And kind of, I would say, it sorts of plays out along that. So we had already seen that the key ministries, for example, the ministers have been retained, let's say the rail, road, etc. So what we are kind of anticipating, let's say, for example, we were not really positive on roads earlier, and because being an election year, then we expect a bump up on that in this current year, especially in the ordering. Similarly, in the railways, we expect a positivity with the dividend. Let's say the RBI is providing a lot of headroom for the capital goods space to actually perform out there. So, of course, there are a lot of areas. So we have highlighted, especially in power and the other spaces, there is a strong pipeline, even for things like non-renewable side. Let's say, for example, thermal power, based on our estimates, 35 gigawatts of tender are there to be coming up in the next few years itself, based on the published pipeline. So in a sense, yes, I agree that we have a very strong line moving forward. So be it data centers or any even power transmission as well.
So let's go project by project, Priyankar, and let me start with Vadhvan, which is going to be, once completed, one of the top 10 largest ports in the world. Is going to be an offshore port, and obviously in Maharashtra, Palghar district, etc. First of all, do you see the timelines for this as being feasible, and the kind of companies that will be involved? It's of course being led by JNPA, but the kind of private players that could also be involved.
So we had actually, when we had put out a thematic on the ports and logistics sector sometime in March of 2024, so we had actually discussed the potential of Vadhvan in that. So the issue that happens is JNPT is kind of almost congested, so as to speak. So today JNPT is doing something like a 7 million TUs plus. And there is a potential to expand it to maximum of, let's say, 10 million TUs. Then what do you do after that? So, of course, the Vadhvan decision makes rational sense. But having said that, we also have a track record of projects, let's say a Western DFC or something, which has taken a fairly long periods of time. So I would say that the project is definitely needed. And if we go by, let's say, the Vision 2030 or even the Vision 2047 maritime documents, clearly the government would want to go in a landlord sort of a model. So eventually the terminals, whatever comes up, will get privatized, essentially a private terminal operator. So that will follow, but honestly, very difficult to comment whether the timelines would be met. On the other hand, we are at the same time seeing interest from private players, let's say beyond Vadhvan. So for example, JSW Infra, which we had highlighted in our more recent report, putting out a bid for Murbe, which is again quite close to Vadhvan actually as an alternate port. So those sort of developments are happening in the space.
Priyankar, good morning. Niraj here. So I'm trying to now bring the investing in the markets angle to this as well, based on either the RFQs or the cabinet decisions or port development promises made by private players and the capacities of the players who execute some bit of those projects as well. Where is it that you believe the biggest bang for a buck over the next 3 to 5 years lies? Is it in pure play infra and construction companies, or is it in the pick and shovel suppliers, which might be, ancillaries to some of these projects? How do you view this pocket from an investing lens?
So from an investing lens, we have to see it both from, let's say, the growth prospect point of view, and let's say where essentially in the valuation heat map things stands out. So that's at least how we look at things. From that, what we say is that I would rather prefer, let's say, asset-based models, essentially. Like for instance, as I was just briefly highlighting just a while before, let's say for example, a JSW infra type company. So they will typically be participant in this, let's say the port privatization angle, or rather I would say berth privatization angle. And we have seen this quite in play, let's say when they had taken up assets in Paradeep. So I won't be surprised, and we had put that out in our reports as well, that we would actually be betting on such players who, relative to, let's say, the industrial space, would have a relatively fairer multiple. Of course, they have rallied as well. So even after that, I would say that it still makes sense, on that front. As far as, let's say, the capital goods point of view, there would be capital goods companies which would have some place in it, but I would say it would be fairly limited in that because a lot of the companies, let's say, or an Adani or, for example, a JSW, tends to do a lot of activities in-house, let's say.
Okay. Priyankar, what is the runway of growth? Sorry, one last question from mine. What is the runway of growth for some of these? Because a lot of times people tend to look at the rearview mirror and say, for example, L&T has gained so much in the recent past. Can it do more? How long is the runway for growth for something like L&T?
Yes. So based on project pipelines that we have assessed across various sectors, I think for L&T, a 13% order inflow CAGR right up till FY30 is clearly doable. And that is assuming that they are able to maintain their win rate across various sectors at the same level as it is today. So we are not assuming any gains out of there. Given that the project sizes are becoming larger in a lot of spaces where the competition may probably be a bit lower, so the growth rate can even be higher than that. So I would say a 13% order inflow CAGR should be a reasonable estimate for, let's say, an L&T, let's say the core space. So this is, of course, a combination of both India and, let's say, the Middle East. We see actually growth being strong actually at the both ends. So one part is, of course, let's say the power transmission side of things, where in a total nutshell, we are expecting maybe close to 3 trillion rupees of capex in all. So that is required for integrating this 500 gigawatt of renewables that needs to be put into the system. Then we have the issue of peak power deficits suddenly cropping up. So in that sense, we have a capacity shortage in thermal. So government is speaking of 80 gigawatts of thermal power projects. And based on a prospect analysis, we have done around 36 gigawatt is visible right now in terms of tendering pipeline. In case of renewables, we did a similar prospect analysis. 103 gigawatts of prospects are visible right now.
Got it.
So on a base of close to 200 gigawatt, you have a visibility of 100 just right away. So in a sense, this is a path that we are going through. Then in other spaces like data centers, for example.
Sure.
So like we are slightly
Priyankar,
under 1 gigawatt.
Priyankar, I'm sorry, I'm completely out of time. So just wondering if I can lay a number to that. You think the runway is there for the next 5 years at the very least?
Yes. So at the very least, at least till FY30 is how I will put it.
Okay, got it. Sorry, Priyankar, but completely out of time today. But we need to have a deeper conversation on this because you've written a fantastic note on Larsen & Toubro amongst others, and would love to probe some of the finer points of something like that kind of work. But thanks for joining in today.
Thanks, Niraj.
All right, that's the view from Priyankar Biswas. We need to wrap up this leg of India Market Open. Up next is Talking Point.